Hi, Chris Duff over at Serious Land Capital, Vacant Land Funding Partner. So today I wanted to cover another topic that routinely comes up on our Land Daily Diligence, Facebook reviews, or even outside of that, folks will send us various funding deals um, for uh, just active review. And the issue that we occasionally see is that when a property is active, that makes it potentially far more difficult to consider funding that property just because, well, a number of reasons. We'll consider active properties more if there's value add opportunities, and that's generally known within the industry. You can especially buy a much larger parcel and either force appreciation from doing a minor subdivide or maybe even a major subdivision depending on the particular property. Those will be the most typical ways to force appreciation. Maybe you do some additional value add with some light or heavy improvements such as clearing or utility installations, driveway, culvert additions, fencing, etc. There's a number of ways you can improve that will potentially make the property more appealing in the eyes of your end buyer and be able to boost the total exit price per acre compared to what you might purchase the property as, even if it is an active listing. That's really the only scenario that really makes sense, and we speak from experience here. If you buy an active listing and just think, hey, I can just undercut a bit of the price that or the current price at the moment, or maybe I can improve the marketing. Those are really your only two avenues for potentially betting on a successful sale of the property. The issue is, if something's being listed and you're working with the seller to have them potentially take an even lower ball offer price, say they're willing to accept half the price of what the property is currently listed at, then that should be very telling that they're not really getting any offers or even lowball ones with the property being on market. And this becomes even more apparent for properties that have been on market for north of 60 to 90 days. Honestly, I'd be even more concerned. Like if something's been on for even, 2 to 3 weeks and it hasn't gone under contract like immediately, you're already running a risk of some market fatigue or just being a bit overpriced on average. So you have to be extremely conservative when considering buying an active listing. And so let's say that, okay, yeah, you have this motivated seller, they really want to move on. Even if you estimate what the undercut price is for that property and say, okay, it's not moving at the current price, but maybe, 20-25% below, might be possible, and still for whatever reason you get the seller to be even 50% of that reduced undercut price for the active listing, you're going to be dealing with a black mark on the property just by having it uh, accrue more days on market. So even if you shift the listing and restart the days on market, most properties, depends what area of the country, but most properties there's going to be some tag on it in terms of viewers of that listing being able to tell that, okay, this property was previously listed very recently. Whether they can see that previous list price or not is dependent on the jurisdiction and whether the days on market would just continue from the time that it was listed up until the time you buy it. Usually it's going to be reset because, possibly you might work with the same broker that is listing the property, maybe a different one. But, nevertheless, most buy side brokers or on average, savvier buyers would be wondering, okay, what's going on here? This thing just sold. Now it's back on market for potentially even less. That's going to be again, a black mark, negative mark on the property, because people start wondering, okay, what's wrong with this thing? Why? It just sold. Now it's on for even less potentially. Again, we're assuming we're not doing any value add or anything like that. Maybe improved marketing photos. Sometimes that can help, but not not always here. So that's just something to uh, keep in mind regarding this. Additionally, there's a chance that okay, and we've run into this issue before, is that okay, some of these times these properties are going to have a bit more seasonality associated with them, um, and we've bought an active listing where it's like, okay, this was listed too early, but you can try buying it, and for sure buyers are going to be coming in later on, but just no one's buying right now. And we ended up buying that property, but the price ultimately was still the primary driver, and that's the point I was trying to get back to. Okay, you could change some of the marketing photos, maybe the seasonality comes into play, but ultimately that price and days on market are going to be the primary drivers for true value and marketability of particular properties. And the longer it sits, regardless of seasonality, regardless of your marketing efforts toward it, you're just going to be fighting a losing battle along a very slippery slope for trying to retain that value for an active property that you're purchasing. Again, even if you undercut or you accept some explanation and rationale that there's some seasonality involved with the property there, be very, very cautious is kind of the name of the game here. Generally, we wouldn't suggest buying those active properties, again, unless there's a real value add opportunity, or you could just or it was listed for probably sub 1 month, poorly marketed. You can get some insight from the actual realtor listing the property. I know some are a bit cagey about that, representing possible buyer as well as the current seller, but then, you might be looking to relist with them. I mean, there's no laws against that. Some realtors will feel more comfortable or not than others. But we have pursued that pathway in the past. Was working through, motivated sellers in order to buy an on-market property, and then we were going to value add it. It still took way too long. That's another story for another time. But that was a strategy that we did follow there. But bottom line, if you really don't have a value add opportunity, it hasn't been listed that long, I would try to undercut even more on your buy price than you would think. I mean, you'd have to be getting like close to 15 to 20 cents on the dollar for a potential current list price, even if it's getting real activity there. Just because, again, you're going to be fighting market fatigue, black mark on the property, multiple sellers within a shorter period of time. All of those are going to affect the marketability of the property, especially in a buyer's market that we're currently in, where you really have to stand out. Hopefully that helps in your journey of land investing here. And anytime you submit a property, if it's active, just let us know right away. That's always going to be the most critical data point. I don't care about any of the other comps in comparison to the actual property itself. That is by far the best data point than anything else that could be provided. So just have to be upfront and transparent about that. But yeah, hopefully that helps on that topic, which I'm sure we'll return to here and again because it's so common. Want any funding? Check out seriousland.capital. Otherwise, submit requests for deal reviews at Land Daily Diligence Facebook group, and then check out landpricer.ai for the most simple and accurate way to price land. With that, take care, everybody. Bye.